Hello and welcome to webinar series of blinkX. Today we have with us Mr. Akshay Bhagwat, who is the Senior Vice President of Equity Derivatives Research Team. And today he will be talking about the expiry, the monthly expiry that has happened and the market outlook going ahead. Welcome Akshay to blinkX, and we are quite, aggressive or sorry, we are quite happy to have you here, and we want to know what are your views on the market and how the expiry has been and how our clients should be focused towards trading going ahead.
Good evening. Thanks, Shweta. Thanks for giving me the platform to share my opinion on the markets. Today's market really, surprised many. The reason was that you had a fall of over 800 points in the Sensex,
Correct.
and many people are puzzled as to what exactly is this reason for a sudden fall or a sharp fall, because this comes on the weekly expiry day. An expiry day where it sends you chills down the spine, because sometimes when the directional move kicks in, it really kicks in hard, and really there is a question mark as to whether this move is to do with the weekly expiry, or is there some other trend developing in the market, because we are moving out of a roller coaster ride kind of an environment and
Yeah.
trying to get stable around the 25,000 mark. So it is very important that for the confidence to get back in the system, there should be some stability. But let me tell you that today's move is one of the moves. It is primarily because of some escalation in tensions in the Middle East. Iran and Israel, the relations are soaring a bit. Even yesterday, you had some comments coming in from US for for Iran, and these are some minor developments which are taking the markets on a rough ride. Really, it's not a major concerning factors, because if you look at the kind of events which our Indian markets have braced, two of the most notorious events, I may put it, one was the tariff war, which almost escalated for over a month, and the entire world was clueless as to which way this would go. And second was the Indo-Pak escalation of tensions, and really we were in a scare as to how deep this entire episode would go. And luckily, the markets have braced it all. We have moved out of the entire dilemma, and today even the volatility index, I'm happy to say, is below the levels of 15%, which just shows the confidence which the retailers have or the institutions have in the Indian markets. So I will just take you through my slide and present how the markets look forward for the month of June. We are only looking at a short-term perspective as to how you will position yourselves for this month. So I'm just sharing my PPT with you.
Sure.
Yeah. Right now, blinkX, it's a trader's thing. So the first slide here speaks about how the FIs are. Just a minute.
Yeah.
Yeah. So the May series, yes, it was a very strong month.
Your
586.
your screen is not visible, Akshay.
Oh, is it? Yeah.
Hmm.
1 second. Just a minute. I think it should be visible now.
Sure, no worries.
Is it visible now?
Yeah.
Okay. Yeah. So May month, 587 points up, straight gains of 3 months for the Nifty index. We are out of a roller coaster ride, and VIX is back above below 15%. All these things set up straight. We are back in a sweet spot. We are where the uncertainty is behind our back. Now, if you were to look at how the positions from the May series were carried over to the June month, majority of the long bets were taken over to the June series. The
Hmm.
rollovers in the derivative space itself has a lot to say. 79% versus 80% of its historical 3-month averages does say that the rollovers are positive. So the broader market has positioned themselves for a positive move for the month of June. Now, if you were to look at Bank Nifty, RBI event was one slight, a question mark, because before the RBI event, traders were unsure. But really, RBI has given a booster shot. There has been a 50 basis point rate cut, much against the expectation of the market. And
Exactly.
and really, there was a very strong breakout if you look at about the 56,000 mark. So the post last 3 days move has been bit of a dampener, but I believe this is yet to play out. It is that the markets are taking time to digest this news. That is the broader sense I derive, and the belief is that broadly there is a range which is slowly building up for the bank index. 54,000 somewhere is the lower end of the base. We have got past 56,000, but again, we are getting back in the zone of 56,000. So my belief is for the month of June, as we step in, 54 and 56 will be the broader range for the bank index. Rollovers for Bank Nifty also has been good at around 79% versus 78%. Now, FIIs, what they exactly are doing here is the key, because we tend to follow the foreign institutions very closely. We call them hot money because if the markets are doing well, immediately the flows start pouring in. If they sense something is wrong, the money is pulled off. So really, we were in a situation 4 months back where everyone had a question in mind: are where exactly are the FIIs are going? Why isn't the Indian story selling? Why aren't FIIs interested in India? But if you look at the data points last 3 months, I have the data for you in index futures as well as for in the cash market. Now, clearly from the month of March, the data numbers have a lot to say. Positive numbers are flowing back in the Indian markets in the cash segment. In the FNO, yes, there has been some bit of short bets. So really, if you were to just look at the index future segment per se, the long short ratio with which the FIs are working with, that's a bit skeptical. 20% longs compared to 80% shorts. So really, it's more of the small and the mid cap story, which is still persistent.
Hmm.
The FIIs have belief in the mid cap story, and I believe money is chasing that sector, and that is the reason why you have the positive flows from the FII desk, as you see in the numbers which I present. Index futures primarily consist of the Nifty and the Bank Nifty index, and I believe as a hedge, when as an FII you are buying a smaller or mid cap company, or you are positioning yourselves in strong names in the index, there will be a good chance that you create some hedging positions by betting short bets using index as a hedging tool. I think that is what is playing out, and that is why you are getting some sell numbers from the FIIs in the May month which went by. The next is how the sectors are playing out. Now, if you look at the last couple of months, it was auto, metals, and reality. These names have done extremely well. And if you were following a research very accurately, reality basket was one theme which we presented to our traders and investors a few trading sessions back. And happy to report that almost 8 to 10% is the returns which we clocked in the reality basket, which we came out with, DLF being one of the stocks which almost gave us around 12, 14 odd percent returns in a matter of 7 to 8 trading sessions. So that's a stupendous return which was given in a very short time duration. And we look forward to serve you with such trades as and when we get the opportunity. Going forward, I think metals, this sector has been shining well. The China story is supporting the metals pack, and stocks like Vedanta, Tata Steel, SAIL, which had been beaten down for long, they are all getting back in the glory, in the limelight. And I believe still, if the market does give you an opportunity of a dip, the metals, reality, and auto sector should be the sectors to be looked forward to. Now, if you were to look at the open interest positioning for the derivative space in the options data, because when we look at Nifty from a short-term perspective, overlooking the option space would not do justice. So here, clearly, when we started off the day, this is the data a day before yesterday, we had strong action at the 25,000 strike inputs. Now, if you were to look at the open interest, a single strike, if you look at the bar below, there are two skyscrapers, a blue one and a pink one, at the same strike of 25,000. Normally, you see this phenomena whenever the market expects a directional move or a volatile move. We call this as long strangles, where you buy, call, and put in anticipation that there will be a directional flow in the market. And if that does, one of the options is going to expire worthless, and the other one is going to reward you with a 3x kind of returns, which will ultimately see the strategy closing in profit. So that's exactly what has played out out today, if you look, the markets, Sensex down 800, Nifty over 1% down. And when you buy call and put, you really don't know which way you're playing for, but you are sure that there is going to be a big direction which is in the move. And Nifty actually, if you see, Shweta, has been in a range since last 18 trading sessions, 24,500 on the lower end, 25,200 on the upper end. And sooner or later, this range had to give way. And today, I think from the resistance of 25,100, 200, we are seeing some bit of a sell-off. And this might escalate a bit for a couple of days. And we can anticipate some dip, probably till 24,600 or 700. And that dip would offer an excellent opportunity to go long in the market again.
In
So
fact,
it's a
we had
trader's market.
seen, yeah, we had also seen during all these, tariff wars and all, still the Indian markets, they have been quite resilient and they have not been that impacted over the last 1, 2 months also. So like rightly, as you mentioned that, this was much required and it is going to provide that
Absolutely.
buying levels to our people.
Absolutely, because today, what kind of questions we get is that 3 months the markets have been one way up. Where do I buy
Yeah,
this market?
yeah.
Because as each day passes, you are seeing positive traction in the Nifty. The market breadth is improving. So where do I really get in? Are such levels good to invest? Is was the question. And whenever you get short correction, it is the confidence which, as an analyst, I have to give you to see that the small shakeout with the market presents an opportunity is not overlooked, and you don't get carried away by the short term fluctuations. So having a view is important, and here's exactly why I'm presenting that this dip which we saw today, this might kind of terminate somewhere around the levels of 24,700
Hmm.
or levels plus minus 100 odd points, and that's exactly the point where we start looking about reinvesting or looking or hunting for opportunities to get back in the market in a big way. Now, if you were to look at the positioning which we discussed about the FIIs, that is the only slight scare here, because maybe for hedging or whatever purpose it is, the FIIs are slightly skewed on the short side of the market as
Hmm.
regards the index future segment. We are only talking about index futures, Nifty and Bank Nifty and Fin Nifty, which is not much traded, but in the cash segment, the data is exactly contrarian. There are good buying numbers which are flowing, and I believe small and mid cap space will be the space to look forward to in the next round of upside in the market. Well, if you look at the client side, easily a 60% long exposure has a lot of say in this, because clients are going big on the market. They are buying every dip of the market. The SIP route, which the numbers we keep on getting every month on month, has a lot to say about how sturdy the Indian markets are, how confident the investors are in buying at every dip in the market. And it makes a lot of sense to be gung-ho about our markets and look forward to every scares or knee-jerk reaction as an opportunist in the market. So the key levels to watch, support of 24,500. This is more of an option support. Technically, if you are a trader, 24,700 is what I will keenly look into. Otherwise, from a broader June month perspective, the options data is suggesting that 24,500 is a level where you might find some sanity getting back in the market. Shouldn't go below those levels ideally in the current market situations. And overall, with the slight knee-jerk reaction, once things get back in shape, 25,500, 25,700 are the two short-term or a medium-term targets one can look forward to.
Hmm.
So exactly what's the scare? What are the events you look forward to, which you need to keep on your tracker? One is the global updates. Tariff scene is still on. Yesterday, Iraq and Israel and Iran tensions, geopolitical pressure. These things will be there here and there. They will keep on giving you the scares, the chills in between. So have a tab on them just to time your trades effectively. They are not going to cause a dent in our Indian markets, but yes, they will give you an opportunity. So timing is the key. Follow our levels, follow our technical reports, which we publish. I think they are available on blinkX, on all the different platforms, on the mobile app, or even the social media posts which our blinkX comes out with. You will actively see all these updates, and if you follow them, I think genuinely you will have an upper hand over the rest of the traders in the market following our research. Monsoon updates will keep on flowing, and I think we have started off on a good track this month. Rains were in May early, and I think the way this season has kicked off, it should do or augur well for most of the seasonality based stocks. So this is the brief I have on our markets. Slight knee-jerk reaction today. I think sanity will get back. It will give you present you an opportunity to reinvest or buy again on dips. 24,700 for short-term trading, 24,500 from a positional perspective. Keep these levels in mind. Go gung ho at those levels. You will have our baskets flowing. You will have our recommendations on trading at these levels, and follow them. Trust us. And I think your investment journey with JM Financial BlinkX should be rewarding for you.
Yeah,
Thank you.
rightly said, Akshay, and this was quite insightful. I just wanted to ask a question on behalf of my audience, that what should be the strategy for option traders during this, the knee-jerk thing that has happened today and going ahead also. I think there'll be some, a trickle-down effect also. So what should be the strategy?
See, if you're directly participating in stocks or sectors, normally when markets get into a slight dilemma, what we normally observe in the market is the flow of the money tends to follow the safer sectors. Now,
Hmm.
here, IT and pharma. These traditionally are known as sectors where whenever there is some bit of a knee-jerk reaction or confusion, immediately the hot money or the FI money starts chasing these names. And IT as a pack, if you have seen lately, last 3 4 days, there was a bump up, and the last couple of months they have done well. So even if the crude oil were to go up today, or there is a rupee dollar situation, I think these are the stocks which will be least unaffected by what's going around. So IT, Tech Mahindra, TCS, Infosys, HCL Tech, these are some of the strong names you can look forward to.
Hmm.
If you are looking at FMCG, then Marico, Dabur, ITC, and in HCL Tech and Hindustan Unilever are some of the names which have good technical setups. So these can be on your buy watch list in case you want to go for safer defensive bets. Now, if you are specifically looking for a strategy kind of a thing, using the options as a mechanism, then I
Hmm.
would suggest that let VIX get up a bit above 15-16%. Let it kind of get markets get near 24,700 zone. There is where you can set up a range bound strategy, because broadly the entire Nifty as a trade is still neutral. It will trade in the range of 24,000. 200, 300, that's the extreme safe side of a range. Although I said 24,500, I'm giving you 24,300. It's the safest form of level on the downside, where you can write puts and you can write calls from the point where we have fallen. That's around 25,200. If you want to kind of set the strategy up, I would suggest sell 24,500 put and sell
Hmm.
25,200 call. When you sell both calls and puts, what you do is you get to collect the time, the premiums which are escalating a bit because of a fall today. Now, once you got the premiums, you need to pack the strategy so that any untoward risk is kind of mitigated. For this, what we suggest is you go for buying a deep out of the money 24,200 put and deep out of the money 25,500 call. We call this an iron condor strategy, where we
Hmm.
are playing a neutral range. If it stays in this range, you're going to get the maximum premiums which you are sold for. And in case of any untoward movement, which is much against our expectations, still you are hedged, and there is a risk which is defined in this trade. So this iron condor strategy should bode well in the current market scenario.
Right. Thank you so much, Akshay. I think you explained this iron contrast strategy. There'll be a lot of strategies and options which our traders, our clients would be willing to learn, understand. And I just want to mention it to our clients that we'll come out with some learning sessions on the strategies for options trading, for derivatives, and all of that. So with our analysts, the research team at JM Financial, BlinkX, and we regularly come with updates. We already send all the research reports to our clients. So you can download the app. You can, check what our research team is giving as recommendations. So it would be equally rewarding, like Akshay mentioned. And you would know that, the analysts who are doing the hard work behind and presenting all of that to you is something that, we aim to minimize your losses and maximize your profits. So stay tuned with BlinkX and JM Financial. We are here to be a partner of your trading and investing journey. Thank you so much. Thank you, Akshay. Looking forward to our next webinar with you.